friends, the countdown to the union budget has already begun, and all eyes are on Finance Minister Nirmala Sitharaman, who will present the last budget of the Modi 2.0 government on 1st February. The stock market is showing some signs of fatigue as investors are on tenterhooks ahead of the budget proposals and the mega political event, Lok Sabha election. So, what lies ahead for the market until the end of this fiscal year? How should one approach market in the election year? And where is the value buying opportunity? To answer all these questions, today we have Ms. Sneha Poddar, AVP, Retail Research, Broking and Distribution at Motilal Oswal Financial Services. Welcome to our show, Sneha. So I want to start with what FN said yesterday at the Vibrant Gujarat Summit, that India will become a $5 trillion economy by FY28. And then Prime Minister Modi said that India is working towards becoming a developed country in the next 25 years. I want to ask, what's your take on it?
So see, definitely India has made a lot of efforts to actually make such a bold statement. And in fact, the Modi government's vision was there to achieve 5 trillion economy by 2025. He had set that target earlier, but then because of the pandemic, the things got a little derailed, and now the FM has set a new target of 2027-28, and this seems quite achievable because if we've seen in the past, the government has taken many bold steps. They have announced various measures, various policy changes has been made, and various efforts are being made to actually strengthen the overall economy. In fact, if you if we look at the overall GDP projection, India is expected to be the fastest growing economy compared to the other developed or the emerging economies. So with 7% plus kind of GDP growth that is being projected for India, definitely we can achieve the target of 5 trillion. The various policies like Atmanirbhar Bharat, Make in India, indigenization push, export push. So all these the steps towards these would help us to achieve the dream of 5 trillion economy.
Now, where do you see Sensex and Nifty at the end of this fiscal year? Are you comfortable with the valuations?
Probably by the end of fiscal year, I hope you mean FY24.
Yeah.
So by end of 24, probably the markets would be at similar levels, or at max we might be able to touch 22K. But it would be a volatile journey because the valuations currently, after a strong rally of almost 13-14% over the last 2 months, the valuation currently is full. It is trading at around 20x, which is the average for the last 10 years. So keeping that in mind, though everything is looking picture perfect for India, with inflation moderating, with interest rate peaking out, and with earnings growth being really healthy, and all the macro data points coming at very good at a very robust numbers are being reported at the macro level. So everything is looking good, but valuations are full, and this year is going to be an eventful year. We have the general elections in May, and we would have US elections in the second half. So and plus lot will depend upon when the US Fed decides to take the rate cut. So these events would actually be driving the market direction. So it would be a volatile journey this year with the valuations being full. It would not be a very linear journey. From a medium to long term perspective, definitely the trend is positive. There's no question about it. But then there are certain the factors which needs to be constantly monitored. As I mentioned, US Fed rate cut decision. So that would be a key event. And along with this, the geopolitical factors would be a very important thing to monitor.
Okay. What's your view on India's consumption story? Recently, we saw a series of companies release their Q3 updates that actually disappointed market participants. What needs to be done? Tell us in detail.
See, basically, the problem, what is happening with the consumption spaces, the discretionary spending is actually doing really well. It's basically on the staple side that we are facing issues, and that is largely because the urban consumption is overall healthy, but then the rural demand, which was expected to pick up like around this time, it has not really picked up. And the reason being is the erratic monsoon that we saw. So that was the major reason that really delayed the recovery in rural India. And apart from this, so though the moderation, we saw moderation in inflation and various measures being taken by the government, but the demand has been quite weak. People are optimistic that with the general elections in May, there should be some pickup in rural demand. So hopefully in Q4, the demand should recover. Some of the management have highlighted that they are seeing green shoots of recovery. So if that should be probably visible in Q4. So we are all hopeful. And moreover, actually, if we notice, with the inflation moderating, the companies have passed on the benefits of the price cuts to the consumer. So normally it takes more than it takes roughly around 3 to 4 quarters for the benefit to really reflect in volume. So probably so all this should all this should actually come in Q4, and there should be some signs of pickup in rural recovery. So the management is also really hopeful on it, but till that time, from the investor perspective, they should really focus on the discretionary spending companies, wherein the growth continues to be quite buoyant. And by discretionary spending, I mean space like travel and tourism, QSR, or probably the jewelry segment. So if you look at the pre-quarterly updates, they are really quite healthy, and the demand has been really buoyant.
Okay. What is your wish list from the finance minister from the upcoming budget? And what is that one thing you really want government, to work on it on a priority basis?
So then the main focus for the government would be to what they have started last year with the push towards the capex. So that pace should be further strengthened, because that would result in revival in the private capex. Private capex recovery has started a little, but then the full-fledged recovery has not yet come in. So that would be a key thing to monitor, and the budget should be designed in such a way that the private capex gets revival. Secondly, as we had discussed, that the rural demand is still weak. So there should be some measures should be announced wherein we can push the rural demand, because unless and until the rural demand doesn't recover, then the overall economic health would get a little impacted because of it. So the rural demand, the measures should be announced to cater to that. And lastly, the unemployment rate continues to be high for India at around 7%. So some measures should be announced on that front in order to bring the unemployment rate a little lower. Obviously, the government has taken steps towards Make in India, PLI scheme, and also that is pushing overall manufacturing sector. So probably that would help in bringing down the unemployment rate, but not much of a reflection has been seen so far. So thus more measures are really required to bring that to a comfortable level.
Tell us about your overweight and underweight sectors currently.
So currently we are overweight on financials, then discretionary spending, industrials, and automobiles. We are also overweight on real estate, and of late we have turned overweight on the energy sector. So, if we talk about individual sectors, so then in case of financials, the seismic loan growth continues to be pretty healthy at 14 to 15%, and the valuation, especially for the PSU banks, it continues to be very reasonable. Whereas the companies have, their balance sheet has become much cleaner, the asset quality has improved tremendously for them, and now they are able to sustain the ROA of almost 1%. So the financials continues to be a good theme to play. Probably because of the little base effect, we might see growth moderating a little in FY25, but still the growth would be pretty healthy for them, and the sector should do well over the next few years. Now, if we talk about the discretionary spending, so post COVID, there has been a huge demand that we have seen on the travel and tourism side. So that segment has picked up really well and is expected to do well. Even the jewelry segment. If you see the jewelry segment, the growth numbers has been good quarter after quarter. In fact, the segment is seeing, in fact, both travel and tourism and jewelry, both the segments are seeing lot many IPOs hitting the market. So the space should do well. Automobiles has been doing quite well over last 12 to 18 months. Now we've seen even two-wheeler has started its with its recovery, and with the rural demand improving, at least for the two-wheeler segment, and with the very record wedding season that is expected this year. So two-wheeler recovery has been really good, especially from the second half of FY24, and this is likely to sustain over next 1 to 2 years. So these are the four key themes. Real estate cycle has revived, and it is expected to remain buoyant for next 2 to 3 years. I mean, the kind of new launches that we are seeing, the pre-sales booking, and the business development plans that the companies are releasing. So definitely this sector is going to do very well, because the buyers are actually, the genuine buyers, and people are ready to the mindset has completely changed, and people are ready to move from rentals to owning their own house, and they want to move to they have the aspiration to move to bigger house, to move towards the luxurious projects. So the demand for the luxurious projects is definitely booming a lot. So real estate would be another big sector to really look out for, and along with that would come the building material companies, and the housing finance companies. So even that would benefit. So these are largely a few sectors where we are overweight. Among the underweights, we are underweight on metals and IT, because they have a lot dependent upon the global factors, and with the global factors being a lot uncertain, so obviously we continue to be underweight on metals and IT.
Given that this is the election year, what advice would you give to investors? Like, how should they navigate markets?
Okay. So as I mentioned, since this is an election year, in first half we have election in India, and in second half we have elections in US. So obviously, it would not be a smooth journey. It would be a very volatile journey, and especially when the valuations are full. So from the valuation perspective, in case of Nifty 50, the valuation seems to be full, but in case of mid cap, small cap, the valuations are at premium. So one has to be really selective in terms of picking stocks for their portfolio. There are a lot of opportunities if one really does a bottom fishing, but one has to be really selective, because there would be bouts of volatility in the market, definitely. So the right pick has to be there. The right theme has to be selected. then only the investors would be able to make good returns for themselves. So in large caps, you would find a couple of opportunities because there are certain pockets which has not really participated, and in mid cap, small cap, one has to selectively identify the theme, and within the theme, then they would have to really evaluate stock specific wise and pick the right stock for themselves.
Okay. Okay. Thank you, Sneha. Thank you so much for talking to us.